This is interesting because
Yeah.
we're talking about CPI numbers, and
Yeah.
you look at it from a real estate perspective, and I
Correct.
look at it from like how does it affect the stock market. So this is interesting.
I think there's three perspectives here as well. And
Okay.
I think the third is the consumer,
Yes,
right? We're both individuals.
like buying a house.
Yes, not even buying a house, but just pulling up to the grocery store and realizing my eggs cost double what they used to, right?
True.
So CPI numbers, yes, they affect the bond market, and the Fed has to react and they have to adjust interest rates because that's how they combat inflation is through debt and money coming into the market. So, but as a consumer, you are also affected by it, right?
Yes. Yeah, consumers are definitely affected by it, and it's kind of crazy how that works. Like, you know, like, when you're making, let's say you're a business, they make a product, you get it from your manufacturer, whatever. They jack up their price, you jack up your price, and then the consumer's the one paying for it,
Right.
and they literally have like no. They're not at fault at all, obviously, just because you're a consumer.
Yeah.
But then it's just crazy how the Fed can literally just like change.
Oh,
Like they can just say something and it just changes.
right. It's just like, hey, we're actually deciding to crash the markets today.
Yeah, no, literally.
And then it's just all red tickers just going down.
Yeah. So when they raise rates versus like CPI data is different when they like bump it by 75 basis points because it's like those are like the Fed rates on like loans. CPI is more like directly just to the consumer. Doesn't really affect. I mean, it affects real estate,
Yeah.
but it's not like
So there's separate. So CPI stands for Consumer Price Index, and basically it's just a conglomerate of goods, and those goods are adjusted, and like some are like a grocery basket, like they're literally like a dozen eggs, a loaf of bread, a gallon of milk, and then all of these different adjustments are made, and basically then when they have that conglomerate, they can just say, hey, look, this is inflated or deflated at a certain amount. And over the past year, it's at 7 was it 7.1 or 7.2?
right now.
Yeah.
I don't know what.
Just over 7%. It
was like
decreased
7.1.
by, yeah, it decreased by 0.2%. But Jerome Powell just came out and basically just said, hey, we're still going to have rate increases, expect more in the coming year.
Yeah.
So
that'll probably be like 5 more hikes.
yeah, probably
next year, 5 or
And
6.
realistically, that's a crystal ball coming into it because the Fed's gone back and forth with this stuff.
True.
So it's like
I thought we were getting close to the end.
Yeah,
Everyone
me
was
as
like,
well.
"Oh, okay, we got like 1 or 2 more left."
Yeah.
And then they're like, "So that's crazy." So what are the rates now? Are they like?
Yeah. So they're just sub 6
Okay.
as of yesterday.
And that's just the central bank's rate. That's not on top of like mortgage lenders, right?
Yeah, so
How
I
does that
mean,
work?
it just
Walk me through that.
depends. So it depends. So if you go with a bank, a credit union, a mortgage broker, whatever you're doing, I mean, you can find rates in the 5s, you can find rates 6s, heck, in the 7s. It just depends on who you're going with, and then the terms in which you qualify. So your credit, your income, your all of these different factors, right? They all come into what the rate is, but
Oh, so you could have technically a higher rate versus the market rate if you like higher debt to income and like all that stuff.
yeah, 100%.
Gotcha.
Yeah, it's just like any personal loan. So like if I wanted to go get a car, if you're not a credited worthy person, you're getting a 17% interest rate. But if you walk in and you got like an 800 credit score, they're going to be like, please buy a car, 3% interest rate, heck, 0%.
Yeah.
Like they just want to sell it to you because they know you'll pay.
That's crazy.
Yeah, it's such a weird, intricate system. That, yeah,
It's literally a board game almost. Like
yeah, and it's
you can
constantly
control
changing.
you can control your credit like pretty easily. You're like, all right, I'm gonna make it drop 50 points. You're like, I know I could do exactly this, and it would do that. And then like 2 months later, it's back to normal. It's crazy.
That's the intriguing part, is because the actual credit knowledge when it comes to like understanding what you should and shouldn't do with that credit, it takes a bit of education. And I know that you're interested in it, right?
Yeah, I'm very interested in it.
Tell me a little bit more about your credit journey.
Oh geez, I'm kind of just like throwing myself into the water. Like I don't even know how to swim, but I'm just like putting myself out there.
By
What?
in what way?
just like getting new credit cards and learning about what they do. And so I want to get, there's this guy that has, it's not a course. It's more like a membership, and then like he puts out content consistently. It's not all pre-made content. There is like pre-made content.
Right.
But then it's just like, okay, he's doing this today, and he posts it on a close friend's story. That's how you get in. You're added to his close friends on Instagram.
Interesting.
And I really want to join that. I'm going to eventually. Just right now, I don't want to do that yet.
Right.
But I'm just gonna learn as much as I can.
Yeah.
Prior to that, and I can learn it. You can learn a ton just from following these guys, even if you're not paying for their services.
Right. It's out there.
And yeah, so it's just like I follow a couple different people that do like the credit stuff. And so it's really interesting, and I just want to like, I don't know. Once you learn credit, like it can go a long way.
I know. I was just looking at somebody's story the other day, and they're like, just paid to my flight in to Cabo free with credit card points.
Yeah.
And we just started this 3 months ago. I'm like, the leverage that you can make with just a card is so interesting. And then the actual, what's the word? Not the dialogue, the conversation, excuse me. The conversation behind credit cards specifically and credit building is a very polarized one. It's like, credit cards are bad, Dave Ramsey style. And then there's the people that are like, dude, you should have like 10 credit cards, leverage this, increase your buying capability.
Yeah.
It's like the two perspectives, I think both of them have some validity.
Yeah. Well, like the guy I follow has like 300 credit cards.
300 credit cards?
Probably like 100. I don't know. But like a fuck ton of credit cards. And it's just
100%.
like, okay, but he's got a strategy. He knows what he's doing with those. He knows how to like properly take care of that.
Yeah.
And there's like people that have one credit card that just like can't function. So it's like it depends what your goal is. If you're getting a credit card to just pay for things and not utilize what they're really good for, then it's like, whatever, just use your debit card.
Yeah.
But if you're going to take the initiative to learn about credit and educate yourself, then it's like, go for it.
I think that kind of boils down to most things in life, right? It's just like, maybe you should take the time to educate yourself before you invest in something. Not only invest in something, but use something.
Yeah. No, for sure. I know where you're coming from. But there's a lot of perks that you don't know of or think of before you get a credit card, and then you get one, you learn about what it does, and then you start using it, and it's like...
Tell me about your airport story that you felt all bougie with.
Well, like, okay, so with my credit card, I get a free Clear subscription, which is like this in-depth security check at TSA. So pretty much like you go, like you do a little fingerprint scan. It just expedites the whole process. There's like a separate lane. You go do that. Then
you get the fast pass in the security line.
And then you go through pre-check. And it's just like super nice, especially when you're in like bigger airports. Like obviously Boise, it doesn't really matter. Like when I was in Phoenix, it was kind of busy. Went through that, and I was out in like 5 minutes.
And that was because
still had to wait for Bree because
of your Amex, correct?
Correct. Yeah.
Yeah. So your Amex credits you for that.
Yeah.
Simply
so
because of
you get the subscription, call them up, and they'll credit your statement.
So interesting.
And they'll do that. Like I have my Walmart Plus subscription,
right?
$12 a month. They reimburse me for that, and then I get 10 extra cents off of gas. And there's a lot more stuff. I got to go experiment with that app with like the subscription, but it's pretty cool.
The fine print, man, it's detailed. And
yeah, well, like last night I was talking to my buddy, and I was like, yeah, I can't wait to go to the lounges. And then I was like, but
the lounges.
I was like, don't quote me. I was like, but I don't think I can go because I'm not 21. I'm like, I don't think I can go into certain ones. So I read up on it, and I can only go in the ones that are like non-self-serve bar. So if there's not a self-serve bar, I can go in them.
They've got self-serve bars at airports. I swear, airports are pretty much just like a way for people to travel and then have an excuse to like get absolutely trashed.
Oh, for sure.
Just like
my brother's buddy,
champagne and then Jack on the Rocks when you're on the plane.
Yeah, my buddy's brother's like, I literally just go to the airport lounges to get drunk. But so they're changing the fee structure though. So if you're an Amex Platinum holder, you get in for free, complimentary.
Okay.
And you used to get 2 guests complimentary as well.
You know who's coming with.
Now that's moving to the corporate Platinum, and the regular Platinum you have to pay $50 per guest, unless you're a Centurion card holder. But You have to be invited to that one, so that's pretty
See,
exclusive.
You're just pulling out all these terms I'm completely oblivious about.
No, it's
Centurion.
that's the black one.
The one that you need invite.
Yes.
An invite for.
Invite only. So the lounges are called Centurion lounges.
Yeah. I remember the first time I experienced a Centurion card, I was working at Chick-fil-A in high school, and I grabbed that thing and it about pulled my wrist.
People just have the Centurion like paying at Chick-fil-A. I'm like, bro, what? Why don't you just have like an Amex Gold that you use for like everything?
Well, because we're invited.
Well, no, I'm saying, but like use that for like your business spending, not like $28 at Chick-fil-A.
Yeah, but
Probably just use it at.
racking up points, dude.
Yeah, no, for sure.
When you're at that level of business, there's a way to make everything look like a write-off.
But yeah, credit cards are important for the people that want to learn how to use them. You have to learn how to use them, or else they're not worth
100%.
your time, energy,
Yeah.
or any of that. But
Yeah.
so yeah, to wrap this up, more rate hikes. You buying a house soon? You're gonna wait?
Yeah.
Doesn't really matter.
Here's the gold nugget.
Okay, here we go.
For all of you people out there that are considering buying, ask your agent or whoever's helping you find a home about assumable loans. Okay. Seller finance options, assumable loans, seller paid for closing costs, rate buy downs. These are all tools that are at your dispense because it's slowly transitioning into more and more of a buyer's market. So assumable loans is basically a way where you can transfer the principal that is owed on a property to your name. So you can take advantage of a 2.5% interest rate if somebody locked one in and you qualify for that loan. So realistically, that can take your debt service and cut it in half if you do a little digging, ask the right questions, and you're working with the right agent. So gold nugget for today.
I like that. Yeah. Are you buying a house soon? That's
Am
my
I
question.
buying a house soon?
What are you doing?
I'm always
What's your plan?
looking.
Yeah.
Yeah. So
You're not like actively like, all right, I'm gonna find one and buy one, but you're just like, if.
Yeah. So I'm not in a rush. I'm very comfortable with my situation.
Yeah.
My tax record's coming in clutch in February, so we're
True. You'll have two
almost
then.
there.
Yeah.
Yeah. But on top of that, I'm just going to be keeping an eye open for those assumable loans, because you can truly make a deal happen where a deal wasn't there at all. Like you're looking at a $400,000 house, 6% interest rate. You're talking about $3,000+ loan. But at 2.5% interest rate, you're looking at sub 2,000.
That's crazy.
So you're
that's insane.
Yeah, and that's for your principal, interest, taxes, and insurance. So not just your loan.
Yeah.
So yeah, it's a powerful tool, and it's out there for consumers. And I hope that they can understand that it's there. So that's what I'm doing as an agent.
I like that.
But yeah,
This might be a question for our good old friend Bryce, but is there a workaround to the 2-year tax records?
there's always a workaround. It just depends on your
Like,
loan
what if I
products.
had like cash in the bank?
Yeah, there's bank statement loans.
Okay.
Yeah, so bank statement loans, I could apply for one and get qualified.
Interesting.
The problem is there's a lot of loan products out there that fit every need possible.
Gotcha.
It just depends on the rate. So
Yeah.
my bank statement loan, like a year ago, I was qualified for a great amount of money. I could buy a house at like an 8% interest rate, and I'm like,
Because that was a bank statement loan.
yes.
I
so
see.
I was like, yeah, never mind.
So 2 years of tax records pretty much just gets you like the best rate possible, easiest kind
I
of
mean,
thing.
it's a barrier of entry of sorts in order to qualify for FHA conventional,
crazy.
easy traditional loans. Yeah.
Yeah. And these tax records, do they need to be like solid? Like, what if you did like some freelance work one year? You have some
Yeah.
1099 income. Is these like W-2s?
Yeah.
50K plus, probably. Like,
You know what? That's a good question for a lender, and I think it also depends on the lender that you work with.
True.
Because some people don't want to sort that out.
yeah.
It's almost like a CPA. So like, are they going to go above and beyond and get those tax deductions, or are they just going to be like, hey, this is it, ask no questions,
Yeah.
and then that's all final. But I think that you just want to make sure that you're working with the right people, number one, that know what they're talking about, and then shop around, number two, because not everybody offers the same things. Yeah. You've got credit credit unions, banks, mortgage lenders all offer different products at a different rate with different fees.
It's crazy.
And you should ask a lot of questions.
That's crazy.
Yeah.
Like that's a business to me where I'm just like,
Yeah.
that business in itself is very interesting and intriguing to me.
Yeah. I mean, you're literally just a middleman between.
I have
giving
zero
people
clue
money.
how it works, but I'm fascinated.
It's an intriguing process, and there's a lot of layers to it. Fannie Mae, Freddie Mac, people selling off loan products, how that entire system works.
Yeah.
And then there's like the person that's actually servicing the loan or underwriting it, and that process. But I think the cheat code is really just working with somebody like a good real estate agent if you're looking to buy, because they usually have contacts that they trust and have had reputable contacts with. So,
Yeah, it's all about network.
oh, yeah. All right, people.
That was a great 15-minute
Yeah,
little back and forth.
love it.